All right. So let's go back to EU first. So we selected EU for the month of August. And now let's rewind how we even got to the process of wanting to trade EU this month. Well, with the filtering process, there's three things that I'm looking for. I'm looking for a interest rate differential, whether that's a large one or a small one, right? I'm just looking for some type of differential between the currency's central banks. So you got the euro, which is the what? The ECB, the European Central Bank, and then you got the US dollar, which is the Feds. Now we know that there is an interest rate differential between them because their rates are not the same. So let's go take a look at what their rates look like right now. Come down here, the Feds right now is currently at 5.5, and the European Central Bank is at 4.25. So there's a 1.25 difference, basically, right, between the two banks. So there's some type of differential between these central banks. Now, rates tend to positively impact. Sorry, I just got a text message. Rates tend to impact the currency positively if it increases. So the higher the yield, the higher the interest rate. The higher the interest rate, the more likely investors are going to go towards that currency. Now, that's not said that just because the Fed's right now is at 5.5, the dollar, right? And European Central Bank, euro, is at 4.25, doesn't mean dollar is going to always be bullish, till the end of time or till they change and become lower. That's not how it necessarily works. But in moments in time, you'll see how that plays a role and when it's time for the dollar to go back bullish or vice versa. So let's take a look at another thing. The other thing that I like to filter out is the monthly candles range. So what was last month's range? Was it large or small? And we can see last month, look at July, it was pretty small. We can all objectively see last month was still in a small range cycle. Now, I'm not sitting here telling you, oh, it has to be within a certain amount of pips or a certain pip range, but just looking at the chart, right, visually, we can see that this candle is pretty small relatively to other candles the last 3 to 6 months from this candle here. So we count back 1, 2, 3, 4, 5, 6, right? Let's look back 6 months. Look back 6 months. You can see the largest candle body wise. We're not talking about wicks, body wise, right? We can see that this candle was the largest. We haven't had a candle as large as that within the last 6 months since July. Right. And now look at today, August, in present time, August, this candle is already bigger than this candle 6 months ago. So we knew that this month, more than likely going into August, we were going to have a large range cycle. This is something that's very natural in the market. It's very occurring, it's frequent. You can see this on any daily time frame, weekly, even if it's fractal. Doesn't matter the time frame. The market's always going to go from a small candle to a large candle. And after a large candle, possibly back down to a small candle. Now, you can't predict every single time when the market's going to flip into a large or small cycle, but we can take educated guesses. That's the whole point of trading. You're not always going to get it right. Your sentiment will be wrong, but what you can control is the amount of risk and the model that you're going to use. That's what you can control. You can't control the market though. So we knew that this month was going to be large. And so far, we're right, right? Our speculation was correct that this month was going to be a large range cycle. It's like flipping a switch on and flipping a switch off. They flipped the switch back on to large, and there we go. So that's another reason why I selected EU. Now, let's go back into the daily chart. Now, seasonally, because this is another factor, seasonally, the markets were following correlation. Euro was down and dollar was up. So if we just take a look briefly here, I'm going to look for either Euro FX or Euro futures, not EU to US dollar, not this. I do think it's the same, but I typically, this is the source I use. So, month of August, it was supposed to be bullish at the beginning and then supposed to decline throughout the rest of the month. Do we have that right now? This is a great example because I've always talked about it. And we actually were able to pick a pair where it didn't listen to its seasonal tendency. August was supposed to be down, quote unquote, by this data, right? But we can see right now the market is not bearish. I'm sorry, not yeah, bearish. It's bullish. The market is still going up. So it's not following the seasonal tendency here. Same thing now. Let's go back to it. So the fact that I saw euro going down, I wanted to see if dollar was going to go down as well. So let's go back and go to the DXY. Nope. Go dollar index. Look at this. August bullish, completely inverse to what euro is showing us. So that's another reason why I was comfortable with picking EU for the month. And I also said at the beginning, if you watch the daily updates, I take you step by step, day by day, all the little signals that add up to, okay, whether we're bullish or bearish. Watch them. They're very short and simple ideas that I try to help traders understand trend. This is bullish and euro was bearish. So I like that. So we have the interest rate differential. We have the seasonal tendencies moving in market correlation, though right now it's not doing it, but it's still moving in code because dollar's going down and euro's going up. And then we also had the small range cycle coming off of last month. So we had those three pairs, three things to filter out the pair that we were selecting for this month. So hopefully that makes sense. Let's go back to the chart and let's bring it back to the beginning of the month. Now we got the annotations on the chart. We know exactly what happened, but I'm just going to go through the process of how I like to do this. So we came into this market at this month expecting that the market would go down. So I said in that first episode, right, for the month, if you go back and watch August 1st or August 2nd, the first, I said, I want to see if price is most likely going to give a scenario of bringing price above in a premium, running some type of buy side liquidity pool, and then going short. Now, that could have been the 20-day look back high here, which is right up here. It could have been that run up there and then go back down. That was a possible scenario. I also said price could instead do what? Go down, go up, and then come back down as well. That's another scenario. We've seen that happen play out in some months. Another scenario we thought about was price is going to be bullish, right? We got to think about the other side of the coin. How, if it's not going to be bearish, how would it produce a bullish month? It's going to drop below, more than likely drop below the August opening price or the monthly opening price. And that's where the commercials or quote unquote the market makers are going to get their pinnacle of all buys. And when I mean pinnacle, I mean the best buy opportunity. They always get the best buy because they control the market, right? Or someone else in the world, even if you're a retail trader and you were, for some reason you were able to speculate a higher EU, you knew to buy below August's opening price. If you already came to your narrative quicker than other traders, right? Sometimes it takes a couple of days for things to progress. I like to take it slow unless I'm very aggressive and I'm like, okay, this is a signal I want to take and we're going to take it. And there was one right here. That's a smash candle buy opportunity because this candle closes the close of this candle. Look at this daily candle. Its close is below more than several daily lows. It's closing below lows. So retail, right? The average trader will look at this and say, this looks bearish. That may not be the case. This is where they like to trap traders right here. Now, I know a lot of people, when you say, oh, but what about BPR, right? Balanced price range. They also trap traders with that as well. But this down close candle, psychologically, a lot of traders will look at this and say, oh, the market's falling out of the sky. But to me, this is an oversold signal. And this is a Larry Williams ideology and methodology. If price gets back to this candle's high, that's where you would buy. You'll buy with a buy stop order, place your stop loss below that candle's low. And you guys can see where the price is right now. And you'll see how that progresses. Now, as the market continued to progress, because we recently broke what? A swing low. I wanted to see if price was going to print what? A lower swing high compared to this one up here. Because going into the month right here, this candle, you know what I'm going to do? I'm going to bring it onto I'm going to open up another tab so it's clean. I like analyzing on clean charts. There was a sell signal. See how short-lived that one was? It's an old idea. Okay. It's important that you mark off the opening price. It's very important because as you go along, you get it more experience. You'll see how this will get you on the right side and the way you think in which direction the market's going to go on. Let's go back to the start here. Okay, price breaks a swing low here. Follow along. This can either represent two things, and I'm going to ask the chat because I'm going to engage with you, some of you guys in the chat. I'm going to check the chat now. What does this signal? When price breaks a daily swing low, there's only two things that price is signaling here. Can anybody tell me? And check the chat right now. Only two things. Okay, that's one. That's one answer. Good job, guys. False break. People are saying false break or false move. Okay. And now what's the other answer? What's the other side to that coin? Yes. Okay. So someone said a turning point or a continuation. Great answer as well, right? So it's either. Now, what I was specifically, those are all great answers, guys. What I was specifically looking for was bearish momentum, right? That term. This is either going to be bearish momentum or a false break. They're going to trap sellers. It's a possibility. But in order for us to have more confidence and confirmation whether or not it's going to be a false break or a bearish trend continuation, we need to see what the next swing point is going to be. So let's play it forward. You can see instantly price runs up and breaks a swing high. So we can take the idea, right? Take the educated guess. You see how this smash candle, that buy signal here would have bought right here and it would have knocked you into profit or a reasonable long. And it was a very large range too. The second day of August, very large day. But instead of price printing a lower swing high, because if it's going to be a continuation, and I know it sounds like a lot, there's always one or two ways things can occur. I like to keep it very cut and clear for myself, right? Black and white. If it's going to continue to go lower, like some of the folks said in the chat, if this is going to be a continuation to the downside, bearish momentum, it's either going to do two things. And I'm going to draw it on the screen here. It's either going to continue to sell off and then print a lower swing high. That's one scenario. Then we would probably find a way to jump into that bearish trend, right? Now, another way that this could happen is price could run up one more time, fake traders out to the upside, and then sell off. That's another scenario, right? Get that breaker, or we get some type of mitigation idea. Price runs up and takes out this. Now, what I'd like to do is vice versa. Everything that you guys just answered, we just flip that answer around. I'm going to look at the break of this swing high here now as bullish momentum, or like we said earlier, it could also be a false break. So we need more confirmation. I still want to see what that next swing point is going to be because I need to see at least two consecutive swing points being formed, either higher or lower. Just play it forward. And this is where patience comes into play. We had that busy there. We mentioned that. We had a buy side imbalance, sell side inefficiency. We said that in the daily updates. We said if it's going to make another turning point to continue this trend, supposedly towards this upside, the bullish momentum, is going to do what? It's going to print a higher swing low, and more specifically, the higher swing low is going to form inside this PD array. It's pretty no-brainer. 1, 2, 3. There you go. Now, by definition, this is a higher swing low, but it's not confirmed yet. This swing low is higher than this one. I'll just put higher swing low. This is a lower swing low. So we have signs that, okay, break swing high and we get a higher swing low. There's signs that the commercials are probably doing what? Looking to go long. And in these down days too. Best believe they're buying in those down days too. Though the market is printing a down closed candle, they are still buying in these down candles. They're more likely buying in these down closed candles than I would assume than the up candles. I would assume they're selling a lot more in up candles than they are down candles. And I'm talking about the commercial speculators. It's a very funny paradigm because everybody would assume, okay, because the candle finishes down for the day, that means they're selling heavily, right? Oh, it's bearish. What's the word retail traders would say? It's selling pressure. There we go. Right. Oh, it's selling pressure. The market's falling because the market closed down. That's this. It's not selling pressure. That's not what's happening here. They're just reaccumulating the orders to go long again. That's not selling pressure. This higher swing low, it's only confirmed when price returns back to this candle's high up here, right there. Now, we said in the daily updates that there could be a sell-off here if it's going to follow that seasonal tendency. We were still on edge. We were still on the fence because here at this point, we do have a swing high. 1, 2, 3. That's also a swing high and also a swing low. We have that in the same breath of this candle. There's a swing low formation and a swing high formation. We also went further to say, right, this is when you start really studying the market. You have an inside range. This daily candle, look at this daily candle. There's so many concepts and natural concepts I like to blend together. This candle is inside this range, Thursday's range, high and low. And we said in that daily update, we want to see what side of the range the market's going to break. Is it going to break the high of this bar, of this candle, its range, or the low? And I said, as a tip, with my experience and ideas like this, the side that it breaks is going to be the intended direction the market makers want price to go. Again, let's take a step back before we go further. We were on the fence about whether or not price was either creating a lower swing high to sell off because price was where in a premium. Because we still had that in our mind that seasonally, right, this ideal sells. What happened up here? And then down here, we got discount. This ideal buys. We could clearly see the ideal buy was down here. You only had 2 days to get the best buy of the month. 2 days to get the best buy. And I'm not talking about the buy that I recently have. It's a decent buy, but I'm buying in a premium. Objectively, it's not the best buy because it's not a cheaper buy. I'm buying in a premium. You're going to be forced to buy in a premium eventually if the market's trending. You got to get in the market eventually. But like we said, we were on the fence because we were in a premium and we were like speculating, is price failing to break this high and going to continue going lower? So I said, either side, if it breaks this way up to the upside, then we're probably going to continue going up. If it breaks the downside of this candle, this range here, it's probably going to continue to go lower. And let's see what happens. Play it forward, play it forward. It broke to the upside. And we finally confirm this higher swing low because price breaks that high. It also confirms that this is a new bottom, quote unquote. It's a new bottom for the market. So the market's going to get away from it. It's also going to get away from these down candles. And any bullish trend, I know it sounds very silly, but obviously in any down trend, the market's going to do what? Run away from down candles. In any bearish trend, the market's going to run away from up candles. That makes sense, right? I know. And after this, we said, okay, we're going to look to go long now. We could look for long opportunities. And I said, how could we find a way to get on long? Now, there's so many ways you could go about it. I like to give traders a handful of ways to enter the market realistically. At this point, after confirming this higher swing low, we're bullish. So your mind is bullish. You're not sitting here telling yourself, we're bearish, we're bearish, we're bearish. Based on the way we're doing it, at least, right? The way we're approaching it and the way I like to approach it. I take off the seller's hat, I kick it to the curb. I put on the buyer's hat. At this point, I have many options at disposal here. Every day going forward, I could just be a buyer, right? And I want to buy in the best opportunities intraday. I'm going to buy below midnight opening price. I'm going to buy below the weekly opening price. I'm going to buy below the kill zone's opening price. That's London, New York, even London close, even Asian session. You could buy below in a discount, looking for price to go higher. It's a very broad structure. I'm trying to give people to give checks and processes, right? We step one, we do this. Step two, we do this. Step three, we do this. This is how you create a model for yourself, and you could curate it any way you want. Excuse me. You could curate it any way you want. You don't have to specifically take it the way I'm giving to you face value. Oh, Deontay said you got to do it this way, so that's the only way. No, you can implement it into your lifestyle and the way you like to trade. My easiest way to do it to take stress off of me because I'm busy sometimes running the farm and the land and trying to maintain crops and stuff. I wait for a down day. I love that. I wait for a down day. And that down day, everybody's going to assume, oh, the market's changing trend. It's going to sell off because it printed a down day. These are just very general assumptions I think the average trader would assume. And after that down day, I want to be a buyer while everybody thinks it's selling pressure. So see price even breaks another swing high, still going up. But this entire time, I wasn't long. Remember, I waited. I waited a pretty long time. Now, this is where I was looking to go long. I had to wait pretty much 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I had to wait 10 days to even take a trade this month for EU. Besides all the UJ Asian session models, right? For EU, for the month I was looking for a swing trade, right? For a trade that I can hold for X amount of days. I had to wait 10 days, basically almost 2 weeks and change. A lot of people don't have that patience to wait for that setup, but I do. And I know you guys can too as well if you stick to it and you study the market. Now, on this down day, I like to consider this a counter trend candle. Why? Because it's a candle that's opposite towards the trend I'm expecting to unfold. I'm expecting an uptrend, and I just got a down day in present time on Thursday. So I need to buy after this candle. What do I tell traders to do? You can buy at the close of this candle. You're not buying immediately as soon as this candle closes. You're going to place an order here. That next daily candle that pops up around 5:04 p.m. New York time, you're most likely going to get triggered in. Now, the spread is going to be very large because we're coming off of a break there, coming off of a break of a session, new daily candles opening. The spread is widened, right? It's going to be very large. So it's going to be expensive. So you could either wait till the spread narrows again and see if you can get a buy closer to this candle, the close of this candle here, or you could just automate it. Put in that buy stop order, that buy limit order, and hold and wait for price to go higher. Where's your stop loss going to be? Your stop loss is going to be below the most recent swing low or the most previous daily low, right? That you have closest to price. It could be this low, this candle's low itself, or it could be this candle's low. I went along with that previous swing low because I know if it's going to continue going higher, this bottom should be protected if it's going to keep trending higher. I'm not saying there aren't moments in the market where, the market's very volatile, volume increases. There might be I don't know, a world disaster, something very tragic happens. There's news, right? Price could spike down and then shoot back up. That happens. Hey, all you can do is manage the risk. That's it. You can't control when the market's going to spike down and where it's going to run your stop. You don't know. You're taking an educated guess and how far the market's going to give before going back into profit for you. So you would buy here with a buy limit order and vice versa. You can buy up here with a buy stop order. We'll write that out for you guys. So buy stop order. We'll do BSL, buy stop, BSO, buy stop order or buy limit order right there. I would prefer you using the BLO, right? Buy limit order. Why? Because you're buying on weakness. I prefer the market to go down, become cheaper, so I could buy it at a cheaper price to reap the benefits. Because technically you're buying on a discount. It's on clearance, right? It's on the clearance because it's a down candle in this uptrend. So this is an opportunity to get into sync with the market makers. And you see the next day, what happens? Buy. Little to no drawdown, which is a great feeling as well. But don't expect every idea to be this perfect. It's always going to look a little different. Price may trigger you in the market and drop down a little bit and then come back up. So be cautious of that and risk well. Now, you can see how the other order would have been triggered as well. If you would have put a buy stop order right here, you can see how you're triggered in on strength. I don't necessarily prefer that method of buying. I don't want to buy while price is going up because you're buying at a more expensive price. It's risky. It's like the market can make a top and turn around and sell off. I rather buy when it's going down. You play it forward, you can see how that idea, again, this is where it would look like. I went long there, stop loss here. You're risking anywhere from 1% or 0.5% because this is the idea that I'm looking to swing trade. I'm looking to swing trade. I'm looking for price to do what? Give me more than a 1-to-1 or 2-to-1, or I'm going to aim for some type of level that is rewarding. And I'm going to look for some type of swing high that we haven't broke yet. Here. So we have one up there. There's a swing high formation up there. So that's where my TP is currently. You play it forward. And this is where we are currently in price. Odds are we're going to hit this level. I can't guarantee it 100%. I'm not sitting here telling you, oh, now Deontay told me to go long, and now you're going to go long, and then it pulls back, and then now you're in drawdown, and then you're blaming me. Like, oh, it doesn't work. You got to be in it before the move even occurred. But going into all these days, I said on this day, what could you do on this Friday? I said you could look to go long below London Open, below New York Open, below Asian Open, right? The night before, and go long London Close Open. Let's take a look intraday, how that played out. I want you to take a look at this. This is what I sent in the chart and told you guys to study this. Let's go down to the 50-minute time frame. And we're going to put on the kill zones. Hopefully we got it on here. Yeah, we do. Perfect. This is that down day here. That Thursday was down. Now we're going into Friday. Take a look at all the kill zones going forward. Look at Asian, London, and New York. And I said in that daily update video, I said look to go long below the kill zone's opening price. That's Asian open there. This is London open here. I'll draw it all the way out here. This is New York opening price here. And this is midnight opening price here. Look at how in this day, on this Friday, it gave traders multiple opportunities, if you were looking for that, to buy at a cheaper price for the day. The London traders were able to get a cheap buy. New York traders were able to get a cheap buy, and even the Asian traders as well. They were able to get a sliver of a, just a little bit, not too much, of a discounted buy going into Friday. Do you see that? Look how systematic it is. Look how rigged it is. They pull the market down, cheap buy, run it back up. Pull the market down, cheap buy, run it back up. You even have London close. Look at London close. Reversal for those that know as well. London close, kill zone. There's London close open. It's from 10. I'll highlight it yellow. From 10 to 12. That's London close. You got all those kill zones there. You see how the chart almost looks it's all colored in. It's like we're not missing a step. Everything is accounted for. Right, we got the Asian session, then we got the Asian dead zone, we got the London session, then we got the London dead zone, we got the New York session, but then we have that overlap, right? So then we got that, put it right here. Then we got that London close session here, and then we got that New York. I like to call it the New York lunch personally. It could be called the London close lunch. I don't know. I just coined it or told myself that I should call it the New York lunch, and then we have the New York lunch here, larger dead zone. Even see how it is this dead zone too? It's still trending too. Not all the times is it going to consolidate. You know, the dead zones do consolidate. Look at that. I love talking about this stuff because it's so eye-opening to traders. People don't even realize like the market's so timely rigged, engaged to do certain things at specific times. So if you're trading in an unfavorable condition or a dead zone, you're always going to be frustrated. You're not going to be able to catch moves like this, or you're not going to be able to get into the market at a reasonable price point and hold throughout the day. You're not. Can't I wouldn't force trades in any of the zones that are gray. I would totally opt out of trading there. The only time you're holding a trade is if you got in during the colorful sessions, Asian, London, New York, or London close, and that's it. Let's take a look at the 15-minute time frame. You can see how price comes down, right? Drops all the way down, and it's either trying to run some type of sell side liquidity pool, and then or some type of clean low or inefficiency, and then runs back higher. So if you just take a look, just hindsight. I know it's hindsight. Not saying you would go in here every day and you'll pick every single inefficiency and get it right. Trades into what? This fair value gap, this 15-minute swing, uh, buy side imbalance, sell side inefficiency right here. Trades right into it. Trades up and away. Let's move on. Let's look at the New York session. Price comes down below 7 a.m. Doesn't necessarily run. It gets really close to this swing low. Makes a double bottom pretty much. Creates a double bottom and then runs higher. Fails to break that low. And then you can see, look at London close. London close raids that clean low that's formed in New York session and the dead zone, the London lunch zone. London close comes down, reversal, takes it out, runs sell side, and pushes back up. Let's just study this real quick. I just want to see it for myself for study. 1 minute time frame. I want to see if an entry idea that I like is showing itself. So right here, after taking out that sell side, there it is. Look, it's so, I love it. The very first fair value gap that forms. Make it red. The very first fair value gap that forms after taking out that New York sell side liquidity pool via 15-minute chart, and also the other 15-minute liquidity pool here in that London lunch. The very first fair value gap is used to sponsor the buys, and they push price all the way up. And this is also what? Look at the fractal idea. This is a smash candle, Larry Williams smash candle on the 1 minute time frame. It's the same thing I show you on the daily chart. Look how this candle comes down, closes below all these candles. If price does return back to that candle's high, that could be a buy signal. Look how quick price returns to that high and shoots right through it and takes off because it looks like it's selling, right? The entire time it just drops, it drops, it drops, it drops. Eventually, a turning point can happen, and that's right there. That's the source of that turning point. That's the new bottom. And in that smash candle, it's also a part of the swing low. 1, 2, 3. These three candles. 1, 2, 3. Oftentimes, you'll see that smash candle part of that swing formation. And let's go back to the daily chart. Clear some of this off. Oh, we didn't need all that off. There we go. And this is where we are now in price. Well, here we are now in price. And going into each day, you could still be looking to go long. Let's take a look at something here. Right? Every single day now, moving forward, you should be looking for long ideas. There's probably a long idea here in London session. There's probably a long idea here in New York session as well. I could definitely see one here. Look how price takes out this 15-minute swing low in that dead zone right there. Bang, takes it out. You're looking for a long there. You're looking for some type of turtle soup idea. Let's see. Look at the again, the very first fair value gap that forms. You see that? The very first fair value gap that forms after taking out the sell side, look at how they use it as a catalyst again to sponsor the buys. Look at that. Where's the buy occurring again too? In a discount. You see how the buy is not, we wouldn't want to look for the buy above 7 a.m.'s opening price. That's just ridiculous as a trader. That's nonsense. That's not business oriented. What person would ever want to buy at a more expensive price, unless they're supporting a friend, I'll pay the premium price, I'll support you, I'll tip you, I'll pay more for it, because you're my homie and I just want to support your business so bad. Whatever. But most businessmen, right? If you're business oriented, you're trying to get the best deal. You're not trying to pay for this too, you're not trying to pay too much for it. You're not trying to come out of pocket. So when the market gives us a discounted opportunity below 7 a.m., we got to take that idea. Again, the narrative though, how did we arrive to this bullish trend? How did we arrive here? Because we can't even start thinking about, okay, we're going to go long on Monday or moving forward. We're going to go long on Tuesday. We can't start thinking like that unless we understand what the market is doing. Again, we got a break of a swing high. At first, we got a break of a swing low. Price fails to create a lower swing high. Instead, it reverts back, takes out a swing high. So it makes me say, okay, let's wait for a higher swing low. We get a higher swing low. It's confirmed here on Tuesday. At that point, you could be looking for longs. Now, you're not every single day is your longs going to be justifiable because you might get stopped out. There might be retracement still. You see again. Look at that. Same idea. Happened twice this month. Fair value gap to the upside. Price trades down into it, trades away. Fair value gap to the upside. Price trades down into it, runs away. Daily chart fair value gaps though. So it takes time. And if you were to going to go long, like our what is it called? Institutional order flow entry drill. If you were to go long here at the top of this candle, your stop loss would have to be below the candle that makes the fair value gap or the most recent swing low again. That's how I would gauge it. And you go long at the top premium side of that fair value gap and hold for higher price action. Same thing here. If you wanted to do that here, you would go long as soon as price hits that top or that bottom wick here that ends the fair value gap. You go long there. Your stop loss would have to be where? Probably below that candle's low that starts the fair value gap, or even the previous daily low. Right, one of these lows that are lower than where you're going to go long that hasn't been broken yet. So it would have to be this daily low. Or you have other means to measure that metric. Everybody's a little different, but I'm just giving you some ideas and cues on how you can frame trades. I definitely know you guys are intelligent and smart individuals, so you guys can definitely do it. I believe in you guys. Now let's take a look at the DXY. So everything that we just saw for EU is happening for what? DXY, but inverse. So we did have a smash signal for a buy opportunity. You can see it was short-lived. You were in profit for probably 2 days, and then it turned around. So let's just get rid of that. And you can see how price finally got down to that stop loss if you were going long. Now you see everything is inverse to what we are seeing for EU. Go down to the DXY. So we have it on a chart here. You see, at one point in time in the beginning of the month, we had two things here. We said bearish trend, or we had it like this, or false break. And we're assuming, okay, maybe there's a false break. Maybe it broke this swing low here. Maybe it could turn around and go along. Because like I said before, seasonally, we were looking at what? The seasonal chart, and the data was telling us that August should have been bullish for the DXY. So we had that in the back of our mind. But notice how we were using intermarket analysis all throughout the month. We were looking at GU. We were looking at AU. We were looking at NU. We were looking at gold. We were looking at UCAD. We were looking at USwissy. We were trying to get a bigger picture and a sense of, is market flow symmetrical or is it non-symmetrical? Are these pairs moving in the correlation that they should be? If dollar's going down, that means we should be seeing UCAD sell. We should be seeing USwissy sell. Right? We should be seeing those signs. We should also potentially be seeing UJ sell off as well. USwissy, look at that, selling off. There was a buy signal as well. We were looking at a lot of smash candles for the paid group. But here you can see how price was running up. That was that buy opportunity. See how that one candle right there is just a signal, buy signal, smash candle theory. And you see price gets here. That's where you would go long right there. That candle's high, and you look to hold for higher price action. Maybe hold into some type of fair value gap. hold towards a certain, dollar amount, that you're looking for, or a pip amount that you're looking for, whatever it may be, and you hold, and you can see how that one idea would have held you for a couple of days. You were in profit for 1, 2, 3, 4, 5, 6, 7, 8. You still are technically in profit because price didn't hit your stop loss would be this low. But let's scratch that idea because we know it's selling off. And we can see that there is a sell signal too, inverse. Look at the sell signal. That's the same thing I just showed you, but inverse. This candle is closing above highs. Price got back down to that candle's low. That's the sell signal. Smash candle sell signal via daily chart. You can see this on the 4-hour. You can see this on the hourly. You can see this on the 1 minute, like we just showed with EU, that London closed 1 minute long. But it's so fractal, and it's a very simple thing for traders can utilize if they don't have time to trade the market. What time is it? 10:19. I got a little more time. If you don't have time to trade the market, you got kids, you got parents to look after, you got a job, you got a business, your business owner, whatever it is. There's many ways for you to still participate and try to make some income on the side trading. Now, I'm not telling you go live right away. Demo trade it for a couple years, or a couple months. Get familiar with the ideas and deploy a little bit of capital in a small account, live account, and try these ideas slowly. You don't gotta use huge leverage. You don't need the best margins or whatever the case may be. Get a basic account, open up, take these ideas, use micro lots if you have to, and take those trades and see how it pans out. And once you get familiar with that, then maybe you can deploy more capital so that you can use and leverage more risk and get more margin access, with your broker. And then maybe you can start moving into those, half standards or standard lots, and then you'll see how slowly you could compound and get more confidence in the market. But always manage your risk. Dollar selling off, so we should see you Swissy sell off. We already got that going on here. We also have a break of a what? Swing low. This was this here, false break. It broke a swing high, then it broke a swing low. So I'm assuming the break on this swing high was just to get traders long so they could go short. And I would continue to go short here. We would want to see some type of lower swing high. That's it. Pretty simple and straightforward. Sometimes it takes a while for that lower swing high to form. Sometimes it might take a week. Sometimes it might take 2 weeks. So for those traders that don't have the patience, if you are more aggressive in the market in your stance, you're not waiting for more confirmations, you could be short now. You could be short every day going forward. Look for shorts or wait for an up day and then go short. Take a look at US oil too. Look at that. We said that during the daily updates too. The correlation, if dollar is going to get weak, US oil should sell off too. And we saw the signs too. False break. Price ran up here, sold off. Do you see the smash signal? I know you guys see it now. You can't unsee it now. That's the candle. This would be your most recent smash day sell signal. It's only just a signal. Doesn't mean the signal is going to be profitable or successful. But if you're going to take that signal, manage the risk. You don't know if it's going to trigger your sell limit, sorry, your sell stop order, and then run back up. You don't know that. So manage your risk. Anything can happen. But so far, that sell signal, this one candle was a signal. Isn't that impressive? Some people might not be impressed, but I am. When I figured this out, I was like, oh, wow, this is so game changer. Like, you could find ways to get in the market without having to slave away and set at this chart all day. Set these orders, preset them, and then go about your day and see what happens the next couple of days or next couple of weeks. So US oil selling off. So you're seeing that in dollar too. Not worry about CAD, ACAD. Look at UCAD selling off too. You want to see a lower swing high form. Price going to sell off. Might create a fair value gap. I can see it already. Yeah, it's most likely going to create a fair value gap. Who knows? Maybe in the next 6 hours it could pull back because it might look a little different. Might pull back, whatever. But for right now, this is what it is. It also did what? It ran a swing low. 1, 2, 3. Isn't that the same entry idea that we like to use for Asian session UJ or any of the kill zones? Yeah, it is. It's the same entry, but on the daily chart. Look at GU, still trading up. You got a higher swing low. here. Look at a higher one. That higher one, it's literally telling you signs. The market is telling you signs. Hey, yo, we're going long. It also broke a swing high, bullish momentum. It's still kicking. This thing's still going. Look at the last down close candle. Not a signal that I took, but you can see I took that signal for EU. AU, same thing. There was a false break at the beginning of the month, August 5th. Price came down, took out this swing low, immediately reprices and takes out a swing high. So we could assume that this was a false break to get traders short below the monthly opening price. They get traders selling at a discount. Not ideal. You should be buying at a discount. And what do? They buy it. They push it all the way down and they push it right back up. Look at every down candle. All you could have been doing was, if you thought dollar was going to get weak and you thought AU was going to go up for this month, all you have to do is just keep waiting for down days and just keep buying after the down days. Eventually, you're going to hit something if the trend is up. Eventually. And you, same thing. So we had a sell signal. Same thing, was up close candle. And you can see it would have been stopped out. So this was a loser. Just an idea I had on the chart to study. But look how they run a swing low. False break everybody again. Run back up to a swing high. Bullish momentum. They're also probably going to create a fair value gap too today. And then later in a couple of days or maybe next week, who knows? It could be left open, trades up. Eventually, it's going to trade and make a higher swing low in it. That's my educated guess. All right, let's look at UJ. So UJ, remember at the beginning of the month, I was really anticipating the yen to get weak again because of the constant interventions and how expensive it was. I didn't expect them to unload, but I guess, hey, central banks have unlimited capital. They could do whatever they want. I underestimated how much capital that these banks can actually have. They could do whatever. They honestly could do whatever they want and intervene as many times as they want, which will suffice to long-term problems in the fiat world. Eventually, long term, I want you guys to all know, realistically, long term, paper money is going to fail us all on this planet one day. That's just my opinion. You want to talk about that outside of this? We could have a discussion about that, but I want you guys to know one day, all the paper dollars people are walking around in these countries with, they're all going to be worthless one day. It only keeps devaluing as the system prolongs and gets older. As the system ages, paper money does not become more valuable. It's not a scarcity anymore. It's not rare. So at the beginning of the month, we were expecting what? Dollar to go strong, and other fiat currencies were going to get weak. GU, EU, AU, we thought it was going to sell off because seasonally it was telling us that. So I had marked up the chart like this. I left it like this ever since, and I had these reclaimed order blocks, right? Last up close candles before the sell off. If it's going to be a bullish trend, I knew that it's going to probably hit one of these on the way up, a return, right, to reclaim where they sold off, reclaim that order block. But we didn't get there because dollar's still selling off. As well, I had marked off some things. We had a smash candle buy idea again, right? Down closed candle, buy here. You can see how it was profitable for a couple of amount of days. You got 1, 2, 3, 4, 5, 6, 7. Normally 7 is funny. 7 days is as long as I would want to hold a smash candle buy idea. 7 days, at least a week. I like to see where we get in 7 days and take profit or take partials. And in 7 days, it got to its highest peak and now it's selling off. Also, I have these down close arrows signifying the down close days, showing you again in bullish trends, the down days are your signals. Sometimes you have back-to-back down days, but you see after one down day, you get a dynamic response to the upside. Down day, dynamic response to the upside. And everything's not perfect. We can see now we have a sell signal, vice versa. That's your sell signal. Smash candle sell. This candle is a smash candle. Because the close, it's all about the close. The close of the candle is above several highs. It's above this candle's high, 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 this one, and this one. It looks very bullish. Buying pressure. That's retail traders saying, oh, this is buying pressure. But that's how they get traders to be overly optimistic in an idea. And then they turn it around. Again, this smash candle is in the swing high formation. 1, 2, 3. See how that smash candle is inside the swing point? Very small things, very subtle. And now they're selling. So everybody that was buying heavily on this candle or heavily into that next candle, they were in drawdown quickly too, or even stopped out. And now we just recently broke a swing low. So that flips everything back. The narrative should be, okay, we got bearish momentum, possibly. We want to see a lower swing high. Maybe we get down here. Who knows? We'll see. Now let's take a look at enough of the daily chart and trend ideas. Let's take a look at intraday ideas. So last night, we had a Asian session model idea. I don't know. Clear this off. Actually, I don't even know what that was. Looking for something. Okay, that's why. I'm like, where are we? I was like, this doesn't look right. Okay. So Asian session model. So last night I put in the Telegram channel. I asked you guys, I said, why did I take that buy? Couple folks did give answers that I was looking for. Congrats. I'm glad that you guys are interpreting and understanding the market. Oh my gosh, look at the sell-off right now. Oh my gosh, dollar's tanking right now. I know dollars dropping. Euro's going up, GU's going up, NU's going up, man. Dollar's getting its chin checked right now, man. King Dollar's not looking too kingish. All right. Asian model here. Again, look at the consolidation in the dead zone. I'm gonna keep it very simple. It's a turtle soup idea. People keep asking me, "Oh, can you make videos about turtle soup ideas?" The Asian session library on the channel is a turtle soup model. You have over 30 examples of this model that I'm showing you. If I was still doing the series, we would probably be at example 100 right now. It's so crazy how often this model occurs. So I'm looking for a swing low. That's a swing low that forms in the dead zone. So that's a swing low formation. Let's mark that off. Cool. Let's mark off the Asian open. This thing ran for some pips, man. And this isn't the last thing we talk about. I'll probably answer a couple questions and then I got to get going. All right. So here at this point, price breaks what? A swing low. But I'm looking for these intraday ideas. I'm not really necessarily looking for it as bearish continuation or bearish momentum. For these intraday ideas that I'm looking for turtle soup. So I'm only taking the stance of if it breaks a low, I want to go long. I'm not waiting for a lower swing high continuation. No, I'm looking for price to go up and go long. And you could tell this is a smash candle that just formed here. It's a large candle. It's a large candle. Keyword, it's a large candle. Psychologically, what are retail traders doing? They're chasing this candle. They just can't control themselves, right? They have no discipline. They see this large candle print on whatever time frame, and they're just like, oh wow, it's selling. Let me go short. It could come back to haunt them for chasing price. I'm going to be doing opposite. While retail traders are chasing these shorts, I'm the retail trader that's taking the opposite stance, right? I'm the counterparty. They're going to sell to me, right? Sell the order to me because I'm going to buy your order. That's what I'm looking for. So I'm hunting for those buys. And it has to form below the opening price discount. And I'm looking for a fair value gap. And we're going to mark off the first fair value gap that forms too. This is the very first one. It's very small, but it is a fair value gap. It's a tiny one. It's not one that most people would see, but it is one. And I'm looking for my model. I think it forms a little later. See, it comes down, hits that fair value gap. It could be long there too. Stop loss 10, 5, 15 pips, 20 pips. Be reasonable. Play it forward. It happened a little later, yeah. I remember now. Right here. There goes the model. See, it still pulls down even after that first fair value gap. Sometimes you get drawdown. But the model that I'm looking for is right here. The entry here. Is this not the same thing we're showing you on the daily chart that just happened with EU? Look at it. 1, 2, 3. Fair value gap through the swing point. What's that? The same thing. 1, 2, 3. Speed through the swing point. Price trades down into that range. Look how it goes higher. Again, on the daily chart. It's right here. 1, 2, 3. Again, 1, 2, 3. Swing high. Look at the speed right through the swing high. Trades into it, runs away. See that? Let's go back to UJ. We go long at the top of that fair value gap or the premium side of the fair value gap. This thing hit TP like in a matter of minutes. It was so quick. The long is happening below the Asian Open. Look at the Asian Open. Look at where we're buying. Cheap. Very cheap. While traders are selling. We're buying now. And TP was hit. That was it. The trade was done. And this one trade, it's a Monday. Let's go back to the 15-minute time frame. That's that 15-minute swing high up here. Buy side liquidity pool. It even ran the lowest low of the session too. So it was running sell side, but the entire time we were stalking. As soon as it broke this one, we immediately start stalking on a lower time frame for that long idea, regardless of how many sell side liquidity pools it runs. It runs this one too. It runs this one too. But the entire time, we don't care. At least I don't care. I'm looking for that 1 minute long. So it runs all these levels, trades in between the levels too. But I'm still looking for this idea. And if you play it forward, so we're 15 pips, over 20 pips off of that one idea. And if you move your stop loss, you are always at risk of getting knocked out of your market order. You're always at risk. That order may not hold up because the market will pull back and go back up. The market will pull back and go back up. The market's not going to go up in a straight line for you. The sooner you are coming to that conclusion, right, and you don't fight that idea, then you'll understand, okay, sometimes I don't have to move my stop loss too early. I could keep my original stop loss and hold. I could pay the trader at 10 pips. I could pay the trader at 15, right? Let's say this was your hypothetical final TP out, right? Or actually putting a TP in, you take partials off. You take 80% off the trade and you hold on the other 20%. Or you take 90% off the trade, right? 95% off the trade, and you hold the other 0.5% just to see if you could squeeze a little more out the market. And you keep that original stop loss, and you can see price trades up higher. Let's see how many pips that ran for. Almost 100 pips. Oh, man. You can't even make this stuff up. But people will think, D, you don't know what you're talking about. Oh, this guy's a scammer. Bro, I'm over here showing people models that would change their lives, bro. Change their lives. Change the whole trajectory of their trading career. And it's so simple. Like, I taught my nieces and nephews this, and they're demo trading this. What for 100 plus pips on a Monday night? Oh my God. Going into Tuesday, 117 pips. Oh, look at the sell down. And eventually it's going to sell off, right? So you got to pay the trader at some point. Don't get too greedy, but you'll see at times one trade is all it takes. One model is all it takes. You don't need hundreds of entries, right? You don't need different ways to get into the market. Keep it simple. It might be a handful. It might be 2-3 ways you'd like to enter the market. Maybe an order block theory, maybe a fair value gap theory, maybe a smash candle theory. But you don't need too many other ways to get into the market. Keep it very simple and concise to yourself. Be disciplined. It goes with anything in life, no matter what you want to be. You just need consistency And you need to practice, 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 practice. I've been doing this for years. That's why I talk the way I talk. That's why I'm so confident. That's why it sounds like I know what I'm talking about because I know what I'm talking about. I wouldn't steer people in the wrong way, especially if I'm teaching them. I don't want to teach anybody something I don't know. Sometimes folks would ask me questions. Oh, D, can you talk about this theory? Can you talk about this idea? I would decline it respectfully because I don't use it. You may have to look and do your due diligence into someone else's channel or someone else's educational services if they teach that model. I'm not here to try and remaster or remix someone else's theory, especially if I don't use it. Everything I've learned was from ICT and Larry Williams. That's all I've ever learned. And some basic fundamentals from baby pips back in the day. That's it. No indicators, raw price action, time and price and time, consistency. I'm going to check the chat, see if there's any questions. If there isn't any, I hope you found this insightful today.